This year has been a year where we have been quietly putting in place the pieces that will be very evident to the marketplace in 26 regarding what it means when you own large amounts of power. You have land and the ability to build a variety of types of data centers, and you're able to deploy and operate tier 3 and tier 4 data centers for the most sensitive data types, for the most critical customers that need to operate with full sovereignty.
Welcome, Fred Thiel. Thank you so much for joining the Bitcoin Rails podcast. I feel like this has been a long time coming that we've been planning this.
Thank you. It has.
Yeah.
Quite a long time.
Quite a long time. And for me, an especially extra long time, because I don't know if many of my regular listeners even know that I've actually been working with MARA for a little over a year now, particularly on the Enduro and Slipstream projects, which Slipstream we talk about quite a bit on the show. Very influential project on sort of the broader Bitcoin tech world, which is what the show typically covers. But today we're going to do something a little different and kind of zoom out into the broader mining industry.
Excellent.
Yeah. So kind of to just sort of get started, I figured that we would talk about how MARA became the largest Bitcoin miner in the world. My understanding, MARA was a public company well before it got into the Bitcoin mining space in, 2017? Is that right?
Yeah. So MARA was originally a company that did vanadium mining, which is a mineral. So they'd been a miner for quite some time. And they didn't do very well at that. That was back in, I think, 2010. And then they did some real estate, and then the company did some oil and gas. And then eventually it was taken over by a group who turned it into a patent troll, Marathon Patent Group. And as a patent troll, what companies that are patent trolls do is they acquire typically bankrupt companies' assets. And one of the patents they acquired was a patent for, very basic patent for using a limited instruction set for voice to control a portable or mobile device.
Okay.
Which just happened to tick the box that Siri is a voice controlled device, as is Alexa. And so Marathon Patent Group sued Apple. Apple paid a license fee to them, and Marathon Patent Group then got very excited and sued Amazon, and that case is still going on. I don't know how many years now.
Oh, really?
But so that is still being litigated. Marathon partnered with Fortress Investments, which has an arm that litigates patent suits. And so Fortress is running that process, and we'll see if anything ever becomes of it. But in 2017, a group took control of Marathon Patent Group and decided they wanted to go into the mining business. And so they brought on board a friend of mine, a gentleman by the name of Americo Komodo, who was a lower mid-market finance guy, had run hedge funds and was an investor. And he had to first fix the balance sheet of the company. It had some notes on it. It couldn't really raise capital. It didn't have enough liquid net worth to be able to issue equity on the market and generate equity returns. And so he took a little while to do that. I was asked to join the board in early 2018 because I was familiar with Bitcoin and crypto, and the other board members weren't. And so we spent some time changing players on the board and getting everything ready to go. And then lit up the first Bitcoin mine up in Canada in a building where when we turned on the miners, there was such a vacuum from all of the fans that it took the paint off the sides of the walls, and that paint came into the miners and trashed the miners. And there's a great video, somewhere there's a video of this on the internet. We did a movie called The Road to 23 Exahash, and it's in that movie. And then we had to kind of reboot, start all over again. And long story short, we had some Bitcoin mining going at adjacent to a coal-fired plant in Hardin, Montana, and then had problems there where there was a weather event that caused part of that coal plant to literally go offline completely. And so I stepped off the board and into the CEO role in April of 2021 as employee number 5. And we essentially had no hash rate running pretty much. And we decided it was time to really grow. We had been able to raise capital through a vehicle called an ATM, which is an at-the-money offering. At that point, so if you think 2021, Bitcoin price was on a tear. Everybody was interested in investing in Bitcoin miners. The retail market was going crazy. And so we were able to raise quite a lot of money. We placed a huge order with Bitmain for 70,000 machines. And then we just had to find some place to plug them in. And the Bitcoin mining industry really depends on 3 things. And by the way, the AI industry is the same way. You have to have capital. When you have capital, you have to get access to compute. And then you have to have some place to plug them in, which is capacity. And we were an asset light miner, meaning we were looking for hosting partners where we could plug miners in. And so over the course of 2021, we started deploying some miners. Again, we bought more miners. We did a bond offering, convertible bond offering at the end of 21, raised $870 million and placed a very big order with Bitmain for, at the time, the state-of-the-art S19 XPs, and then deployed more in 22 as the market was kind of crashing. And by the end of 2023, we were the largest miner in the world. And towards the second part of 2023, we realized we really need to own the infrastructure we operated in. You couldn't be asset light because when you work with a third-party partner, you're relying on them to operate the machines. You're relying on them to maximize uptime. You're relying on them to service the machines. And what we found was that we were much better at doing that than any of the third-party hosting partners that we had. And so we were able to acquire, again, go back 2023, the market was horrible. We were able to acquire 70% of the capacity where we were hosted for less than it would have cost us to build it.
Oh, wow. So out of curiosity, just going back for a second, during this whole period where you're making the transition into Bitcoin mining, did investors think that you were crazy? I mean, were you guys like some of the first public companies to mine Bitcoin? I mean, what was the environment like at that time?
So basically you had Riot and you had Core Scientific.
They were already public and mining Bitcoin.
I think Hut 8 was already public. Hive was certainly already public. So
when did there start to be public mining Bitcoin companies in general? This was like a meta at one point, I think I remember.
Yeah, I mean, it was kind of what happened was in 21, so late 2021 is when most of them tried to either by acquiring a shell. Riot, I think, actually did an IPO. I'm not quite sure. Because they went public much earlier because they were in a different business. But a lot of these were already public companies that somebody repurposed.
Because they needed like a new they needed a new business model.
They were basically what's called an empty shell.
It's sort of what's happening with DATs right now. Is that?
Yeah.
But yeah, okay.
Exactly.
Fair enough. Okay. So it was a hot idea at the time.
It was a hot idea. And, to be fair, at the end of 2021, I think our stock hit a peak of $81 a share.
Oh, wow.
And we had, a multi-billion-dollar market cap. We weren't a huge hodler. We had so much cash on the books in January of 2021 that we actually bought $150 million of Bitcoin in the market because we didn't have our miners deployed. So we had to do something with the money.
At that time, were you seen as having an advantage in Bitcoin mining relative to the other public mining companies, or was everyone just ripping?
We were kind of at a disadvantage because we didn't own our infrastructure.
Oh, so Corsair, Riot, et cetera, were already in the owning power generation phase.
Well, not power generation, but they owned their own data centers.
Okay.
So we were just hosted.
Okay. But they had PPAs, but they were just... Okay.
Exactly. And so they had lower energy costs, which was an advantage in 23 when the market...
You were extra asset light relative to them. Now you're extra asset heavy, maybe relative to everyone? Or is everyone kind of getting asset heavy at this point, meaning trying to acquire energy?
I think it's all changing. The Cyphers and Irons of the world are going down the AI route very quickly, which... if you just think about the CapEx spend is very asset heavy because all these GPUs cost a lot more than, it's 10 to 15 times more expensive to build a data center and equip it with miners or GPUs than Bitcoin miners. A data center for essentially what's called bare metal, where you're just renting out your GPUs to a hyperscaler, versus a Bitcoin mining operation. On the one case, you're paying maybe $1 million a megawatt for infrastructure and miners. In the other case, you're paying 12 to 20 million a megawatt.
And that's just because of the infra
10
that's
times
involved?
higher return. It's AI has a much higher return.
Is it also more expensive to set those kinds of data centers
Absolutely.
up?
Absolutely.
That's something that came up in my research when I was sort of thinking about Exaion and MARA's recent acquisition of Exaion, right?
Yes.
I don't know if you can share a little bit about the differences between mining Bitcoin practically and being an AI on the data center level.
Maybe let me kind of reframe it. If you think about what are Bitcoin miners really good at? They're really good at acquiring land and acquiring power, and then building very low-cost infrastructure. So typically modular, using containers. Some people just use tents to essentially deploy miners at very low cost. And it's a tier 1 data center. Tier 4 is the highest level of security, capability, et cetera. Bitcoin miners are tier 1 data centers. Most AI data centers typically want to be tier 4, tier 3. And so it's a very different design how you do it. But Bitcoin miners are really good at acquiring land. They're great at acquiring power that's inexpensive. And then they're good at buying ASICs. And the Bitcoin mining industry went from CPU to GPU to FPGA to ASICs very quickly. And you're now seeing the AI market do the same thing. All these Google, Meta, all these guys are designing their own ASICs, or they're buying from Broadcom as opposed to using NVIDIA chips.
So the machines in AI are also going to become rapidly irrelevant. I mean,
there's a very rapid technology obsolescence curve.
Right.
You had H100s were kind of the thing you were buying 3 years ago. Now you're on B300s, I think is the latest model that's available. Much faster, uses less energy per calculus. Very expensive machines, but they require a huge amount of power infrastructure inside the data center to be able to plug them in. And so every 3 to 5 years, you literally have to rip out and replace everything, just like in Bitcoin mining.
Mm-hmm.
It's very simple.
Yeah, it sounds the same.
And so if you think about a data center, it's land and it's power, and then you choose whether you're going to run Bitcoin mining or AI or HPC. And in the AI world, you have really 2 different types of workloads. You have a workload around training, which are high intensity workloads running at a constant amount, and you can't shut those off. Right? It has to operate, can't curtail it. Inference workloads, which is really when you ask a question and get an answer. Those are short burst workloads, and those will have a varied amount of power demand in the data center. If you think about Bitcoin mining, you're running along doing your block calculus, and then the grid operator may say, "Hey, you need to shut down," right? And you curtail, and you have curtailment, and then you come back on. It's really hard for AI data centers to do that part. But if you marry Bitcoin mining and AI in the same data center, you get some flexibility. And it's very important because in the US grid today, there's an estimated demand of about 40 gigawatts of power plus for AI. Duke University did a study where they found that there is 70 gigawatts of power available today that AI operators could use if they were flexible 2% of the time.
Only 2%.
That's it. The problem is then you have to look at, okay, where is that location, where that power is available? Does that power have ample access to internet? Is there water for cooling? Things like that.
And this is a key distinction, I believe, with AI in general, is that it's less geographically flexible than Bitcoin mining.
Historically,
but that's changing.
The fact that you can put data centers in space these days kind of mixes things up. The fact that Starlink has an amazing network of satellites is starting to make it viable to do inference, not training, but inference in pretty remote locations. And I think what you'll find over time is the world of inference will look very much like Bitcoin mining, where you have people operating data centers, some of which are near prem, meaning near where the customer is or the user, metro level, and then remote, large scale. And then there's an orchestration layer that balances between those. And so very similar to Bitcoin, we have a pool that we control, which is our orchestration layer, right? Our MARA's pool essentially assembles transactions into blocks and then directs our miners in 16 data centers on 4 continents to all go solve those blocks, right? And so in the world of AI, you'll find something similar over time develop around inference, which will be front-end load balancing and orchestration that then is able to route jobs to the data center that has the right level of latency, the right amount of capacity available for that specific job. And then data centers will have other features to them.
So zooming out a little bit, what was the transition from Bitcoin mining exclusively into the sort of multi-pronged AI, mining, selling back to the grid, this optionality strategy that I've heard you talk about on other interviews? When did that happen?
So when we started looking a couple of years ago as we were buying infrastructure, buying sites, that we decided we were also going to buy power gen. So we were going to buy wind farms, we were going to do power generation off of flare gas and oil fields, and build a portfolio of sites where the average cost to mine kept moving downwards as close to near zero as possible. And so how do you do that? Well, if you own a wind farm, you don't have to pay anything for the wind to blow, right? You just have to keep that wind farm operational. And so it's
a flat fee, basically.
It's a flat fee, right? And so whenever the wind blows, it's essentially free energy. And in flare gas, whenever you're using flare gas, there's a very low cost. I mean, it's maybe a penny a kilowatt for power. And so it's very low cost. If you look at grid-connected Bitcoin mining, the average price a miner is paying to be plugged into the grid is somewhere between 4 to 5 cents a kilowatt hour.
I don't know if this is public information, but what are we paying on average for energy across all miners?
I think, well, it is, you can do the math, but it's in the somewhere between 3 to 4.5 cents. It depends on the time of year and amount of curtailment.
Makes sense.
So we have a mix of direct behind the meter and then grid attached power asset or mining assets. So when you look at a data center, it really is a similar portfolio. In a data center, there are different things you can use the power for. You can run Bitcoin mining as your base business. You can choose to host an HPC customer. And by the way, there are HPC customers who don't need 500 megawatts or a gigawatt of power. There are some that love 25 megawatts, 50 megawatts of power. So you could take a data center and section off half of it to a smaller HPC customer. Then you have inference AI. And then you have traditional compute workloads, private cloud infrastructure. And when you think of what a typical company of the future needs, is they need somewhere to host their data. They need someplace to host their models. They need infrastructure to run their models. And then they need traditional communications and IT infrastructure. Most companies want to run this in a private way, private pool, private cloud. The reason why is it's very expensive to run stuff in the public cloud. If you were to go talk to an enterprise customer today, they would tell you that it's most probably 10 times more expensive to run something in the Amazon cloud, especially around AI, than to run it in a private environment.
Simply because they're just taking more fees?
Well, what you have to do is if you're a larger enterprise and you want assured response times on your models, you have to request that you get directly allocated systems and that are dedicated. There's an upcharge for that.
So it's a premium, basically.
You pay a premium for that. The other big thing is that 70% of corporate data today is not in the public cloud because companies don't want it to be somewhere where it's available and used publicly. Nobody in their right mind wants to put their personal information into OpenAI's cloud. Right? Every time you upload your health records into ChatGPT and say, interpret this for me, you are essentially giving them the right to use that data to inform other decisions.
Yeah, it's not secure.
And so corporations who are building models and running models to analyze seismic data for oil and gas, healthcare data for drug discovery, financial data for fraud prevention, whatever it might be, they're not going to put that data in the cloud ever. They're going to run it in their own data centers. So if they're not putting the data in the cloud, it means they can't train a model that's in the cloud.
And right now, the hyperscalers are all focused on the big public cloud infra. No one is really servicing these sort of enterprise clients who will eventually probably want their own private data.
It is just starting to change. AWS just announced that they're going to offer private cloud services on-prem. Google is offering on-prem. There's a Lockheed deal that was recently announced where Google is essentially doing a fully air-gapped version of their solution on-prem for Lockheed that does not connect to the outside world.
Interesting. Okay, so even the big hyperscalers are kind of getting hip to this strategy. Yeah. Do Bitcoin miners and sort of kind of the more asset-heavy mega miners, if you will, have an advantage in this game?
So if you were to go to JP Morgan and say, hey, I'm a Bitcoin miner, I want to offer you a private cloud, they likely will just look at you and say, you have no idea what you're talking about. And so this was one of the reasons we made the Exaion investment. To be taken seriously in the world where you're offering private cloud services and inference AI. And let me just back up a second. If you look at what Bitcoin miners are doing today in AI, they're taking a site, they're essentially building a powered shell, a building with power, if they're even doing that, and they're offering it up to a hyperscaler as a tenant. So they're going to the real estate business. They're doing pretty much a lower grade version of what Digital Realty Trust or Equinix does. They can go to the next step and they can actually put racks in that building. And they could even, in the case of some miners, will pay to put GPUs in the building and then rent that capacity out. And so you're either providing what's called power and ping, which is it's a building with power and network connectivity, and somebody is a tenant, which a number of the guys are doing today. But none of them are doing full-blown, let's offer inference AI plus private cloud plus all the services that you need to run that securely, such that a major multinational, a company in Saudi Arabia, a bank, a healthcare company would want to tenant with you. And so we decided we needed to have a partner who would give us credibility with customers because they knew how to do what we were trying to do, who already had customers, and who had technology that was some of the most advanced in that category. And we found Exaion. Exaion is a subsidiary of EDF, which is the largest energy producer in the world for electricity. They operate 58 nuclear reactors. And Exaion is the operator of their tier 3 and tier 4 data centers, which house the nuclear data. And so ultra secure, ultra sovereign, ultra private, and these data centers cannot go down.
Will part of that deal be some sort of relationship also with EDF and sort of the ability to get nuclear power? I mean, are you planning on using nuclear power in France also for power generation or no?
Well, I mean, the deal with Exaion is purely an investment in a tech company.
Okay.
And EDF will retain a certain percentage of the company.
Okay.
So they have a vested interest in continuing to use Exaion as a vendor. But by us coming in and investing money, Exaion will be able to now have the growth capital to be able to really address a much bigger market, which is a huge opportunity for them. So we're super excited about that. And that deal will hopefully close in the first quarter of next year. It's just pending regulatory approval in France. We have been very active in France. We established a headquarters in France for our Europe and Middle East operations. And I think what you'll find over the next year is, you have 3 of the top 5 electrical energy producing companies in the world happen to be French. A lot of their assets are not in France, though. A lot of the assets are in the US. They're in places like Brazil. They're in places like the Middle East, Africa, and other places. And there is a lot of energy generation capacity that is not being sold today. Meaning that, they may sell at peak, but they have a lot of excess capacity, which is perfect for Bitcoin mining. And so I think what you'll find is that similar to what I said 4 years ago at Mining Disrupt, which was as a Bitcoin miner, by 2028, you are either going to have to be an energy company or partner with an energy company, because otherwise the energy companies are going to want to do what you do. Because when you look at national grid scale operations, being able to deploy large flexible loads to balance your grid is a key strategic advantage. And for example, in France, nuclear represents 60+% of their energy. The vast majority of the rest is renewable energy. So they're one of the greenest grids on the planet. And they have a decreasing demand for energy.
Huh. Decreasing population, perhaps?
And they have an increasing amount of generation coming online. And so they really need load balancing. And so we believe that Europe will be a very attractive country for Bitcoin miners to operate in. It is just a market with a lot more regulatory complexity. It's not like in the US where you just get a PPA with a grid operator. It's a very more highly regulated market. And so you really have to start at the top and work your way down, but while working from the bottom up in the marketplace. And we've been spending the better part of this year doing that. And we have very strong relationships from the top down, the bottom up.
From a markets perspective, I mean, was there, I guess, how would you differentiate between sort of excitement around AI versus Bitcoin mining? Are people sort of equally excited about both of these futures, or, is AI sort of the kind of path where most of these kind of Bitcoin mega miners are ultimately going to generate most of their revenue? Like, how do you see that split?
Well, I think my opinion is different than what's written in the press. So
okay,
let's start with, if you read the press, go back to October, September timeframe, Bitcoin price nearing 120, AI stocks going through the roof. If you said you did iced tea with AI in it, you would get a 10x on your multiple on your stock price. Huge frothiness in the market. And I said in our earnings call for Q2 that we believe the market's very frothy.
For both of them, basically.
For both of them. While there is no question that there's a huge demand for AI capacity, enterprises have barely started actually finding a viable use case for it.
It's like a far away, very future-looking industry.
Go back to the internet, late 90s. You put a product catalog online. Let's see what happens. Oh, right. Well, this isn't really generating a lot of revenue yet. And then 5 years later, you had, companies like Amazon, Salesforce, and others who had just taken off with it. So the market's coming, and it's going to be predominantly around inference. It'll be predominantly around private models, meaning not using OpenAI necessarily or Gemini 3 for your corporate model, because why pay for models that are full of consumer data and information when you have your proprietary information and you want to train a model on it and nothing else? You don't want the hallucinations that all that other data inject, or the complexities that that data may add to your product. So you're already starting to see now the rise of open source models taking over. You're already starting to see that in the enterprise market, Anthropic has a higher market share than OpenAI does. And you're starting to see now that people, meaning investors, have realized that the circular OpenAI economy between NVIDIA and OpenAI, this all invest in you and you buy my product, and then you'll invest in me and I'll buy your product, has some serious challenges. And, Oracle, when they said they were going to do this $300 billion OpenAI deal, their stock, I think it made Larry Ellison one of the wealthiest people on the planet. And since then, the stock price has come down because they're now announcing, well, it's going to take longer than we thought, all this other stuff. Bitcoin mining, by the same token, no pun intended, when Bitcoin price was at 120, it was like, oh, DAX, all this stuff is great, amazing. Well, Bitcoin price drops 25%. Just for perspective or context, in 2021, at the peak, Bitcoin was at around 61,000. At January of 23, it was at 15,000. That's a 75% price drop.
Right. So the price drop that we're experiencing right now is basically nothing, relatively speaking.
The volatility of Bitcoin has dropped considerably, even over the last year. It went from 75% vol to about 50, which is just a measure of the risk associated to it. You had all these corporate buyers coming in, you had the DATs coming in, so you had all this kind of demand over and above what would be normal demand. You now have a market where most of the top banks are going to either custody or allow you to hold Bitcoin. You have most of the wealth advisors recommending a 2 to 4% allocation. You are soon going to see the SEC hopefully recommend that or allow that Bitcoin can be held in 401ks. And Bitcoin is becoming part of the financial ecosystem. But what's happened is whales have started selling. I mean, think of it this way. If you paid $10 for Bitcoin and Bitcoin was at 100K and you had been holding for 10 to 13 years, wouldn't you maybe want to take some chips off the table? Maybe you're getting to an age where you're thinking about estate planning. And, I'm a multi-billionaire and I'd like to somehow use this. And so what do? They either sell part of the Bitcoin, they convert it into an ETF. You can contribute in kind, tax-free or tax advantage, and then you can borrow against it. So now you're not even selling your Bitcoin, but now you can borrow against it at low rates.
And a big thing here, I think, in this conversation, I love this thesis, is sort of like Bitcoin's going through its IPO stage. I've heard this, I think you actually probably shared about this before, is that, in the past, there just wasn't enough liquidity in Bitcoin to kind of service these kinds of exits, basically. But now we have that.
Exactly. So now you have this huge pool of liquidity in the market. I mean, Bitcoin is a highly liquid asset. And so you're starting to see that, kind of IPO stage where the initial investors and cash out and the new investors come in, and you get this kind of, hey, I bought it on the IPO day and now the price is down 10, 15%. And you get some people that then sell out. And most of the selling has been people who held Bitcoin for less than 150 days. So they were buying on the up run the last kind of months before Bitcoin hit a peak. And so when Bitcoin falls out of favor, like it has now for retail, because they were off chasing the AI bunny, and now the AI bunny's looking a little ugly, so they're chasing other things, or just licking their wounds. You have pressure. I mean, Saylor, look at MicroStrategy. I mean, I have a huge respect for Michael. He's a good friend. I think his strategy of buying and holding Bitcoin and sort of creating the first real DAT was brilliant. But over time, you have to keep that machine fed and going. And when you get a large drop in liquidity in the Bitcoin market, like what's happened now, it gets harder. And so as you start trading below your MNAV, you all of a sudden become less attractive.
There's only so long, basically, that strategy can run and outperform Bitcoin,
correct,
essentially.
Yeah. And, I don't doubt that Michael will come up with something new, a new way to do it.
Never underestimate Michael Saylor.
Absolutely not. But I think also at the same time, he attracted lots of copycats. And while
who diluted this entire strategy as well. I think that's a key problem that's happening right now.
Exactly. And, a lot of these latecomers to the market have suffered. Nakamoto, Metaplanet, et cetera. And to be fair, Metaplanet wasn't a latecomer. They've been at this in a big way. But, if you look at our Bitcoin holdings, over 50% of it is mined and the rest is purchased. But I think the DAT model, there will be one or two that remain. I think strategy will continue to exist. Michael will adapt, find a new way to raise more capital, or find more unique ways to raise capital and be able to keep doing it. BitMind, Tom Lee has done an amazing job on the Ethereum side in doing this, but I don't think there's room for a lot of them. I think 21. We'll see. They have to come up with an operating business. But, they have Tether and SoftBank behind them. So who knows? Deep pockets, lots of money. We're the second largest publicly traded holder of Bitcoin. And for us, it's an item on our balance sheet. We generate yield with it. And it's there to use maybe someday as a growth capital source, or maybe not. But as long as the Bitcoin generates an appreciation that's greater than what we can get by doing other things with our capital, and
makes sense.
We'll keep it there.
All right, guys, I want to take a quick break to thank you for watching and remind you to click the follow button on my profile if you want more Bitcoin technical deep dives like this. I also want to give a shout out to my partners for making the show possible. My leading partner, Best in Slot, just released the programmability module for BRC20, making the execution of smart contracts possible for the protocol. I know that's been long awaited by the BRC20 community. Alongside this release, Best in Slot put out what is arguably the most sophisticated DEX for trading Bitcoin native assets called Coin Cooker, which I also highly recommend checking out if you want to dive into the BRC20 trading game and get started executing smart contracts on Bitcoin. I'd also like to thank Citrea, building one of the leading implementations of a BitVN-style bridge for Bitcoin. Citrea is building what I think could become the canonical Bitcoin rollup, enabling programmability, scaling. Really anything is possible with a trust minimized bridge, which is the unique value prop of these BitVM-style rollups on Bitcoin. Lastly, I'm thrilled to announce my newest partner, Spark, which is the leading state chains protocol on Bitcoin. State chains builds upon what was made possible by the Lightning Network for payments, but without the liquidity constraints and the UX challenges that often make self-custodial Lightning impractical. Spark is also led by one of the leading payments infrastructure teams on the planet, including founders from PayPal, Facebook. They're incredibly well positioned to turn Bitcoin into a true institutional standard for payment systems around the world, and I couldn't be more excited to support what they're up to. All right, on that note, let's get back to the show.
So going back really quickly into this sort of asset light versus asset heavy transition, that transition occurred for you guys before the big AI revolution was really taking place. So that was something that was a foregone conclusion for you just with Bitcoin mining. Can you share a little bit more about that and maybe what the implications might be for small scale miners or miners who may not have the cap dev to acquire their own energy sources?
Yeah, I think if you look at so there are kind of three drivers, as I said earlier, in the Bitcoin business. It's capital, compute, and capacity. So the longest pole in the tent is capacity. That's the thing that takes the longest to get. You have to find power and find land. Once you get that, now you need to have money to buy it, the land, or at least lease it. You need to get a PPA. You may have to put a huge deposit down. So you need capital for that. And then you need to go buy miners. Back in the last cycle, miners, the market was controlled by Bitmain, and they purposely kept pricing high.
How did they do that?
Just by constraining supply.
Okay.
Right? Miners had lots of money, they had lots of capacity, they couldn't buy compute. And so they purposely constrained supply. And then in 22, 23, the price just came down. You saw a lot of miners buy machines in 24. If you look at the number of miners who are now at or near our scale, there are 4 or 5 guys that are right behind us in size.
And many miners are hurting from this 2024 bulk purchase that hasn't actually accrued the value they were hoping.
Exactly. And now, if you look in the marketplace, global hash rate has continued to grow. You have people like Tether who are in with Electron buying every small miner, every miner kind of around the place that is standing that they can buy. I think it's going to be a challenge for them to integrate those.
When did they get into mining, Tether?
In the same way they got into the gold business, and they're now one of the largest buyers of gold in the world because they
have the capital.
They have the capital to do it. Investors love to compare our revenue per employee to Tether's. It's like, okay, how many billion for 50 employees? Tether. Anyway, but if you look at the small miners, there's going to be a consolidation happening, right? Tether's consolidating a number of small miners. I think you're going to see others do it. The challenge is if you're going after the hyperscaler market, if you want to service Microsoft or you want to service Google, you need a lot of power. So the small miners aren't going to do it.
Right.
These small miners have 25, 30, 40, 50 megawatts.
They can't get into the AI game per se.
They can't get into the HPC game.
HPC game.
And they can't get into a hyperscaler game. They just don't have the capital. They don't have the ability. What they can do potentially is essentially offer up their land and power to somebody who has the capital who would want to build inference AI sites. Because inference is just a different type of animal. and it can be done.
So you think even for small scale miners, this optionality element will be important or relevant?
I think you have to look at it like a real estate developer does, and that's how we did. We have reorganized ourselves around asset management. And every data center is an asset, and how do you optimize the value of that asset? There's all sorts of things you can do with that asset, right? You can run it as a Bitcoin mining site. You can run it as an HPC site. You could run it as an inference AI or traditional IT workload sites. It depends on where it's located, price of power, curtailment, et cetera. There are all sorts of things you can do. We have also always been a technology first company. So we lead with the technology that enables us to do what we do. And so when we started running inference in Granbury, where we're running air-cooled inference in containers the same way we run Bitcoin mining. Actually, in Granbury today, we have more immersion Bitcoin mining than we do air-cooled. But if you can deploy inference AI like you deploy Bitcoin mining in containers, it means you can do it really fast. Because the biggest problem is if you're going to build a building, put network, put cooling, put racks to run training or inference the way most people do it, it's hugely expensive. Just the building, the refrigerator, if you would, is $12 million a megawatt versus $400,000 a megawatt for a bunch of containers that run Bitcoin mining.
Right.
And so if you can not have to do that, and you can then focus your capital on buying the right GPUs or the right ASICs, and you have the right software stack above that lets you monetize every compute cycle and optimize every compute cycle, then essentially a mining site that is a hybrid of mining and AI, you can do arbitrage on every electron you're operating. You can say, okay, at this site, my power cost is maybe 2 cents a kilowatt hour for these hours of the day. I'm going to run Bitcoin mining all day long. And then when my price starts changing, I'm going to run more inference loads.
You would say, though, even for small scale miners, like acquisition of power generation will be important, or maybe a differentiator between.
The only thing that matters today is owning power. Jensen Huang said it 2 or 3 days ago in an interview. He said, if you look at the pyramid of NVIDIA and AI in the world, the U.S. is really strong on chips and data centers. What the U.S. sucks at is building grid and power generation, and China is eating the U.S.'s lunch.
Really?
Yes.
Why is that? I'm surprised to hear that.
China has grown their national grid with such speed, like they do with many things.
Right.
That
top down.
It's top down, right? And in the U.S., it's very messy. Right. And we've had a permitting regime, which has been very difficult to live in with the past administrations.
Is that changing?
They're trying to change it. The FERC and the DOE, it's difficult because when a new administration comes in, they put new people at the top, but all the people that actually are responsible for doing the work are career civil servants, as it's technically called. Those people don't change from one administration to another. And so it's like saying to the people who have been responsible for reviewing your tax returns and say, well, now we want to be nice to taxpayers as opposed to really find every last penny. It's like, well, no, that's not my job.
It's like tenured professors.
Yes. Good example. And so it's very hard to get that change. And, an administration is in for 4 years and hopefully 8 years, and then rinse, wash, repeat, new administration. This is where countries like Saudi Arabia, UAE, Singapore have huge advantages in that they have governments who are able to lay out very compelling visions. They have a lot of capital to deploy, and they stick to their guns about what they're doing, which means stuff gets done, and they're able to very rapidly grow. And I think having spent time in Saudi Arabia, as we've been setting up our regional headquarters there, and spent time with a lot of the big players there, I think you are going to see a huge explosion of AI data centers in Saudi Arabia because they have great access to internet speeds, low speed, or rather high speed internet, low latency. They have low cost power, and they have very low cost capital.
It's interesting because I have heard that, in this sort of vein of what advantages do miners have, or more specifically, MARA has, one of the things I heard through the grapevine somewhere was that the ability to get international power partnerships or power contracts is sort of unique. In the United States, most folks, certainly the pubco miners and maybe other data center, providers, generally speaking, in the U.S., are very domestically focused and not as great about international partnerships.
Absolutely.
Why does MARA have an advantage in that?
Well, I mean, I've spent a good portion of my life living outside the U.S.
Okay.
I was born in France. Parents were Swedish. Went to high school in England. I've lived in many parts of the world, and I built technology businesses that have sold products and technologies all over the world. I ran
It's
a
been
business
a focus for MARA, basically. You've prioritized in a way.
from day one. And, in 2023, we announced the deal with our partners in UAE. We went from signing a contract with our partners to being fully operational, 2 data centers, total of 250 megawatts of power, pulling 140 kilometers of high tension cables underground, raw land, etc. 12 and a half months fully operational.
So it sounds like you would agree, or it sounds like part of your strategy from day one has been you have to have international partnerships. Otherwise, you're just sort of restrained to this United States situation, which is regulatorily more difficult.
And just look at tariffs, right? If it's going to cost me 30% more to bring a miner into the US than plugging it in somewhere else.
That's it, basically.
Right. So, one of our stated goals publicly is that 50% of our revenue will come from outside the U.S. by 2028. We said that, over a year ago, and we're very focused on making that happen.
Are there specific countries that you're more bullish on, or specific regions that you're more bullish on in terms of creating those kinds of partnerships?
So it is a long-term game because you can't just waltz into Saudi Arabia and say, hey, I want to build a data center.
Right.
Get in line behind everybody else.
Mm-hmm.
So you have to go in many of these places and first get the nod of approval from upstairs. And then that opens doors and you work your way kind of down through the hierarchy, while at the same time being able to work with a local partner to identify opportunities. Typically in a lot of countries, they want you to work with a local partner because they want to develop their own infrastructure. They don't just want you to come in and take.
Makes sense.
They want you to invest in the country. They want you to help build local knowledge, build jobs, et cetera. Europe is no different. Europe has a more complicated regulatory regime.
Did that come up in the Exaion deal? I mean, was there conversations at the government level, like we are going to be supportive of France in this situation?
Oh, absolutely. We set up our international headquarters in Paris. There's a reason for that. It's an important part of our strategy for international growth in both Europe and the Middle East, which we think are the 2 most exciting regions right now. Realizing that for us, we view Bitcoin mining in Europe as a load balancing tool for the grid. We don't view it as a place we can find cheap power.
That makes sense.
Right. We're essentially a service provider to the grid. However, we view inference AI, data centers, private cloud as a huge business in Europe because, in France, for example, Microsoft cannot offer sovereign cloud services to French government companies because of the U.S. Cloud Act, which allows U.S. law enforcement to reach into a Microsoft customer's data in France and access it.
Oh, wow.
Same thing with Google. The only way to avoid that is to have a fully air-gapped solution sitting behind.
You need sovereign enterprise solutions.
So, French company operating in France using French technology that the French government has approved. And obviously, the company that is operating the data centers that run the most critical assets for energy in France, which are the nuclear power plants, which is what Exaion does on behalf of EDF, means that their technology has already been approved, vetted, and you're able to go in and talk to virtually any other French company, and then by extension any other EU company And Exaion has some other things that are really exciting. They are licensed under the French regulators as an issuer of tokenized securities. They issue tokenized bonds. They've issued stable coins on behalf of French banks. They have a whole suite of blockchain technologies that are things we haven't really talked a whole lot about that are really exciting.
I believe they have sort of special licensing and special kind of regulatory permits, essentially, to engage in these behaviors, which is rare and unusual.
Very difficult to get.
Very difficult to get.
So we think we have a strategic advantage in the scope of businesses that we can operate. And we think Exaion is going to be very successful in the world of private cloud, secure data center technology. Exaion won't operate Bitcoin mining. That's not the business there at all. That's something MARA will do separately in Europe.
Do you have a point of view about RWAs generally, or we'll see what happens?
It was interesting. I was at FII, which is a Future Investment Institute in Saudi Arabia, and I was sitting 4 rows from the round table where Jamie Dimon was answering that question and Larry Fink was answering that question. And, they all say RWAs are the big thing.
Really?
Matter of fact, Larry Fink was, there was an article in The Economist a few weeks ago where, I think it's the next big thing. And by the way, DTCC was just given a no action letter to be able to do tokenized securities. So, if you think of how the securities world works today, even though you trade on the NASDAQ, you're actually not trading on the NASDAQ. You're trading through a broker-dealer. That broker-dealer then executes the trade on the NASDAQ for you. You don't get physical shares anymore. They're held in street names, it's called, by your broker-dealer. And while technically they're pieces of paper, it's a digital entry in DTCC's ledger.
And it's fully custodial.
Exactly. And so now if you're going to go issue real world assets or securities in a tokenized form, the same custodian, the same people that manage the shuffling of, okay, you just bought this stock and that person bought it. Now you have to move it from this ledger place to the other. The most logical thing is that they become tokenized. They tokenize all of this process so that it can operate friction-free 24/7.
So much more efficient.
And I think what you're going to see now is the stuff that Bitcoin and crypto has been doing, trading 24/7, 365. You will soon see the exchanges trading, maybe not 24/7, 365, but most probably 22/5, meaning Monday through Friday for 22 hours a day. And then they'll take the weekend kind of pause, and then you'll get to 6 days a week. Kind of like the way the futures exchange works.
Oh, wow. Okay.
And then it'll eventually go to 24/7. It's all a question of all of the pipes and plumbing have to work, and that takes time to put in place. But 5 years from now, I think people will be, the term banker's hours will be gone. 9 to 5 will no longer exist.
It will all be crypto hours.
People will be trading 24/7, 365. You'll have to have global operations, different time zones. So that, and you'll see liquidity pools balancing out around the world. And it's going to be a super exciting time. You'll be able to move money from your bank account onto an exchange instantaneously by using a stable coin of some sort, either the one issued by your bank or one issued by a national government or one issued by a third-party provider. That'll go on and off exchanges. Money will move at the speed of light. And I think it's going to be a very exciting time. And Bitcoin plays a big part in that as one of the most sought after assets for holding your store of value in turbulent times.
I'm curious, while we're on the topic of geopolitics, also, if you could sort of touch a little bit on kind of China and sort of China's role. And is there a sort of mining war happening between China and the U.S.? Is that overblown? I mean,
I don't think there's a mining war going between China and the U.S. because if anything, the Chinese government at the highest levels is cracking down a little bit on Bitcoin again. And that's most likely because, and this is just purely my inference, not that I have real data here, but more than likely certain members of the government have used Bitcoin in a way that they shouldn't have. And as you know, Xi Jinping has been going through a big anti-corruption drive to stamp out corruption. And, there's a ton of Bitcoin in China, a lot of Chinese holders of Bitcoin. China has allowed people to own Bitcoin. They just can't use it to buy goods and services, purely as an investment. And
similar to the US.
Right. And I think now you're starting to see a crackdown happen. That being said, major cities that have all this ample power have opened up to Bitcoin miners.
Oh.
And so there's a particular region in China, whose name I forget for the moment, that has opened up. And China is now, yet again, the third largest site for Bitcoin mining in the world.
And
Kazakhstan and Bitmain, Canaan, and MicroBT are all there.
What are the implications of that? I mean, so I know that there's sort of, you mentioned open source as sort of a movement that's developing earlier. I think that there's been a lot of discussion about that, especially amongst kind of the smaller scale kind of pleb solo miners that I know. There's a lot of concern about kind of the amount of control that Bitmain has over production of ASICs. Do you see that evolving or changing? I know Jack Dorsey is working on ASIC miners, open source, firmware, everything. I mean, how do you see that story evolving?
Well, in 2021, we came up with the idea to co-found a U.S. Bitcoin mining ASIC manufacturer, who today is called Auradine. So we co-funded that company. We seed funded it, brought in Mayfield, brought in engineering talent from Palo Alto Networks, which is one of the top ASIC designer teams in the US.
So they're making chips, actual chips.
They make ASICs, yeah. So so Auradine, their latest hydro miner was tested recently and performs just as good as the best Bitmain. So they make full-blown miners. They also will sell chips if you want to assemble your own miner.
How's their production going right now? I mean,
it's continually increasing.
Okay.
And so we're obviously a very large buyer of their systems. The great thing about their miners is one of the biggest problems with the Chinese miners is they're designed as shoebox miners. They're not designed for industrial mining, meaning large scale, able to control them, to be responsive to grid signals, all that sort of stuff. Which is something we wanted. We wanted them built directly for immersion, built directly for large-scale remote power, be able to essentially task them to operate based on power price, global hash rate, and Bitcoin price.
And this involves, did MARA, I don't remember if I'm hearing this correctly, but does MARA also operate its own firmware, or?
Yes.
It does?
Yeah.
Okay.
Yeah. I mean, we today, to be fair, use a portfolio of firmware solutions. Depending on the machine we're running. So in the Auradine machines, we run Auradine's firmware. We run third-party software in any Chinese miner. We won't run, so it's either ours or a derivative product of somebody else's, but we won't run factory original firmware in any miner we operate today.
Okay.
Reason being, we don't want there being any chance for somebody else to in any way take control of our miners. The biggest risk to national security in this country is Chinese-owned, Chinese-operated miners that could all of a sudden turn off or turn on and essentially take down the grid. Bitmain has huge capacity in the U.S. today. Through Cango, other companies they control.
It's probably, 80% of miners in the United States are Bitmain?
Are Bitmain manufactured, but Bitmain, the company, operates hosting or has their miners hosted on their behalf by many companies.
Interesting. Okay. So there's levels to this.
Right. And so, imagine if they took a 250 megawatt Bitcoin mining site and just shut it off and the grid operator had a direct. You would take out transformers. It would cause all sorts of havoc.
So you'd say there's no Bitcoin mining war happening with China, but we want to make sure we're not vulnerable.
Exactly. So, definitely nobody should be running original, OEM original firmware. Replace it.
Which is challenging because a lot of, again, especially these small scale miners who, I'm hopefully going to be reaching today, they're sort of dependent on Bitmain firmware at the moment.
I think Jack Dorsey's intention is very much to be able to provide those small scale miners with a solution to their problem, which I think is great. Because we're a large industrial miner, and so our focus is on doing things at a very big scale. And his company is very good at doing things for large volume of customers that have small volumes themselves. Right? You look at Square, you look at all those things. Designed for mom and pop stores and boutiques.
This is his mission.
It's his mission, right? And so I think it's a very honorable mission. I give him kudos for doing it. But I think over time, the Bitcoin mining is just going to continue to industrialize and centralize. I had hopes a few years ago that you would see Bitcoin mining embedded in any electrical system as a way to use excess electricity. Unfortunately, I think it's a little bit like the dream of building demand response systems into everybody's home electrical systems so that the power utility could turn on and off regulate your air conditioning to save power for the grid. These systems all end up resulting in some form of centralized control. And so I think, unfortunately, as mining gets more difficult, as the capital around it gets more intense, as difficulty rates keep going up, it's going to continue to centralize around people who have a vested interest in controlling block space, which is owning enough blocks out of every day's additions to the Bitcoin blockchain that they can ensure the ability to verify transactions.
How risky do you think miner centralization in general is? I mean, how are you concerned about that? Should we as Bitcoiners be concerned about that right now? And is kind of the miner centralization, just centralization of hash power, going to pose a meaningfully different risk than, just a bunch of pools, basically?
Well, I mean, you've got a couple of issues. One is you have a lot of mining happening in the U.S., but most probably a third of mining hash rate operating in the U.S. is pointed at China. Again, Bitmain controls a lot of hash rate. Antpool has a lot of hash rate in the U.S.
So this is one of Trump's initiatives, is we want more hash pointing towards U.S. pools specifically.
And MARA pool only mines for MARA, so we don't have any third-party customers, but Foundry certainly does. And there's a belief amongst the U.S. government members, the U.S. government, that mining hash rate that is not pointing at a U.S. pool is not U.S. mining hash rate.
Fair.
And by the same reason the U.S. government wants to have a Bitcoin strategic reserve as a way to be able to defend Bitcoin, just like the gold reserve is there to defend the U.S. dollar, and the petroleum reserve is there to defend the price of oil, which is a carryover from the old legacy of the oil crisis in the 70s. The U.S. needs a hash rate reserve. Think of it that way. They need enough hash rate in the U.S. such that if there were an attempt at a 51% attack on Bitcoin, the U.S. would have enough hash rate to stop it, which is why the stated goal is 60% of global hash rate in the U.S. But again, that is totally for naught if, half of that is pointed at China.
Yeah, it doesn't matter. It becomes irrelevant.
Right. So, I think the Trump administration has done a lot of great things for Bitcoin, obviously cleared a lot of regulatory paths, opened it up for TradFi in some great ways. But when you look at the centralization around pools, I don't foresee a U.S. pool doing a 51% attack. The only other risk you could look at is censorship. And any pool of any size has the ability to censor transactions if they wanted to. But then, everything we do today is censored anyway, whether it's social media, whether it's, whatever you do.
It's tricky.
Yeah.
Why did MARA decide to run its own pool, out of curiosity? And what are the benefits of running your own pool versus, your competitors who I think broadly are using
so the
pools?
The benefit of using a pool, period, is that you can essentially even out the luck factor. right? So in any given month, you may be 10% above your statistical payout or 10% below or somewhere, wherever. The fewer, the lesser amount of hash rate you have, the greater your luck variation is. So that sole miner who has one miner,
One in a million chance.
has no block, no block, no block, no block. Maybe they hit a block and they're that unicorn, right? So it's better for them just to point their hash rate at a pool where they can get a pro rata fee of whatever that pool's total winnings are. But when you get to a certain amount of hash rate, why do you want to pay somebody else to level out your earnings? Why don't you want to keep that 1 or 2% yourself?
Yeah, it makes sense to me.
Right. And so that was the initial premise for it. Plus, we believed that because we were predominantly asset light in the beginning, we wanted to ensure that nobody was stealing hash rate from us. There's no way to do that when your hash rate's being pointed somewhere else.
Right. Again, it's the risks of custodial. Essentially, a pool is a custodian of hash.
Yep.
Yeah.
And so that was another reason. And then lastly, when you run your own pool, a third-party pool has to deal with everything from old S9s to the latest machines. It has to deal with network latencies that are really low to really high. And so it has to balance a lot of stuff out. And so there's a bit of overhead to running a third-party pool relative to how that pool performs. If you operate your own pool and it's tied directly to the firmware running in your miners, you strip out a lot of latency, you strip out a lot of issues, and you can gain a slight little advantage. And so I think if you look back historically, MARA pool has operated a slightly positive to statistical norm advantage. And whether that's just luck or whether that is the fact that, we've been able to extract out some of the fat and latencies, but it's been an advantage for us, and we continue to operate it.
And another kind of more unusual advantage maybe is the ability to run something like Slipstream, which generates additional fees. So shout out to Slipstream.
Yep. And the ability to submit blocks that are, use different templates, et cetera, is really critical. And we've been very happy with what Slipstream has enabled us to do.
Okay, so the last topic that I wanted to make sure that I brought up with you, I actually polled a bunch of my, I would say, mining enthusiast friends who run smaller scale miners, pleb miners, so to speak, solo miners. And a topic that they almost all wanted me to make sure that I brought up with you is heat reuse. This is a very sort of exciting theme, I think, in that community. Finland, obviously, the operation in Finland, the heat reuse district heating project for MARA in Finland. I was wondering if you could share a little bit about that.
Sure. So in Northern Europe, it's very common to have district heating systems. This was something that was developed. Sweden.
And you're Swedish, you said.
Swedish, yes. So in Sweden, they've, as long as I've known, so since the 60s most probably, have had district heating. So we're essentially, you have a power plant that generates heat. Right? Power plant boils water, turns it into steam, uses steam to power a turbine that generates electricity. Well, that steam has to be cooled back into water somehow. And so what they did was they started piping it around the city, and then superheated steam essentially. And now you didn't have to have boilers in buildings. And so the pollution numbers went down and the air became cleaner. And so Finland has done this as well. And in Finland specifically, one of the challenges they had is, they have ample amounts of fuels that are wood pellet based. And so they had wood pellet plants heating water to put in these systems. So while wood pellets are better than some other fuel sources, it's not the best. And so we approached them through a third party where there was an opportunity to essentially replace this wood pellet burning plant with a data center.
So this was your idea. You brought this to them.
Well, to be fair, it was our Finnish partners who brought the opportunity to us. We had been talking for a long time about, heating water and doing shrimp farming and all sorts of other things, aquaponics. And the problem is, if you want to heat greenhouses, well, just a handful of S19s can heat a whole big greenhouse. So it's not good from a large data center perspective.
Okay, so this is a smaller scale operation.
Yeah. So
how many megawatts is the
it's, I
Finland
think,
situation?
9 megawatts.
Okay.
And it heats 80,000 homes.
Wow. 9 megawatts heats 80,000 homes? That's wild.
Yeah. So our intention is to look at using, if you look at the world of inference AI we were talking about, right? So imagine an office building. You build a 50-story office building somewhere. You clad that building in PV, meaning essentially solar cells. You now have solar films that are literally like the film you can put on a car. And now that building generates its own electricity. You put a data center in the basement of that building. You use the heat from that data center to heat the hot water, heat the actual building in the winter. And now that data center has capacity for private cloud and AI in the building, which means you don't need high-speed internet access because you're on a local area network in that building. This is something commercial real estate developers are looking at as a differentiator for their buildings.
So people will potentially use heat from AI, from HPC, from high performance compute for heating buildings.
Yep.
This is going to be
absolutely. And then any excess energy that you are not using from for AI purposes, you can then choose to either sell into the local market, which from a regulatory perspective is pretty difficult in most places because most building owners don't want to be regulated utilities. But you could then just mine Bitcoin with the rest of the energy. And so now you'll have a little bit of Bitcoin mining, you'll have some AI, private cloud, batteries, and solar cells.
Is this an argument perhaps for, is this like a way that people make the argument that, yes, okay, energy demands are going to go up, but maybe there will also be areas where energy can be saved, we'll save on heating and, we'll be reusing energy, et cetera? I mean, is there...
Yeah, so if you go to 50,000 feet and you look at the energy problem today, it's that the consumer of energy is not near where the energy is being generated. Right? You have a wind farm in West Texas, or rather you have hundreds of wind farms in West Texas, and you have millions of people in Houston, Dallas, Austin, which is very far away from West Texas.
Yeah.
And so you need to use transmission lines to get the energy to them. Those transmission lines are bottlenecks. It's like plumbing in your house. Right? You can't double the amount of water you put through the plumbing in your house because the pipes just don't have the capacity. And so you start by moving demand data centers to where the power is being generated. And that way you can use up all that energy that's not being used, that's not being sold into the market or can't get transported on these constrained transmission lines. And then you start moving to microgrids and metrogrids, where you generate power in a local area and only consume it in the local area. And you use the grid simply to load balance so that that microgrid or metrogrid can sell energy back into a pool or can borrow when needed. And so it's much easier to build a microgrid with batteries, solar cells, for example, and operate it at microgrid scale. So single house, community, an industrial park, a small city, than it is to go build a big nuclear power plant somewhere or build a big gas plant and then build all this transmission capacity. It takes 20 years to do that. But you could build a microgrid in a year or two.
Is it, again, the power companies exclusively that are going to be the main beneficiaries of this entire transition? Or is there a universe where, like, Con Edison, is mining Bitcoin and making additional revenue?
So I think it's going to be, different courses for different horses, as they say. The U.S. has multiple grid operators, all with their own, ERCOT is different than PJM, et cetera. Different parts of the country have different problems infrastructurally with their grids. I think one thing you'll see in the very near term is large data center operators will become power utilities. They're all building their own generation capacity. PJM has an issue where you have a bunch of data centers who have backup power. They noticed a drop in frequency on their grid, which is a way to see if you're about to have a power drop. And 7 data centers, I believe it was, went on backup power. So now all of that capacity, all that demand that was sucking power off the grid went off, which creates a power spike on the grid. And so now the grid operators are saying, no, wait, you can't decide when you go on and off backup power. The grid needs to tell you when to do that. So now you're getting this power play, which is only going to cause data centers to say, you know what, I'm not even going to be on the grid. Thank you. I'm going to operate power plant in my garage here. I'm going to run my data center. And, if you want to buy energy from me, happy to sell it to you. But
that's actually a really interesting and important point that I hadn't considered was, do you see this whole revolution, this whole thing that we've been sort of talking about this entire interview as decentralizing
absolutely
who owns power, right?
Absolutely. I'm a huge believer in the fact that, and talk to anybody who really understands data center build out and where are the constraints, and they'll tell you it's energy. There are data centers ready to be turned on that just don't have, the GPUs are plugged in, it's ready to go. They just don't have the power. And they're waiting for the power to get turned on. So if you have power and you have land, there are data center operators who are calling on you, more than likely. And so if you are a power generator and you have land, you're even more attractive. And so you may recall we recently announced a deal we're doing with MPLX in West Texas. MPLX is a large gas refiner. They have a gas pipeline in the Delaware Basin, which happens to be in Texas. We are going to build 3 gas-fired power plants with them, starting at 400 megawatts, growing to 1.5 gigawatts, and build data centers around those gas-fired plants, which will be completely self-sufficient and able to operate. And we will be selling power back to the grid.
Are the hyperscalers getting into this game? Or is this something that the miners have an advantage in?
Well, the hyperscalers are already in the game. Because,
they're buying their own power.
Look at all these deals about Caruso ordering jet engines from Boom, the hypersonic jet company, to generate electricity. Look at GE Vernova. Look at their recent backlog of orders for turbines. Who are the customers? Meta, Google, Amazon. They're all getting into the power generation game. The problem is it's hugely capital intensive, right? And so, most Bitcoin miners don't understand the world of power generation. They don't know how to build, run, and operate a power plant.
They're all stuck on PPAs.
They're mostly all stuck on PPAs. Riot is that way, Cypher, Iron, CleanSpark, et cetera. We own our own wind farms. We generate electricity off of flare. And we happen to have a whole team of people who have done nothing but build and operate gas-fired power plants. This year has been a year where we have been quietly putting in place the pieces that will be very evident to the marketplace in 26 regarding what it means when you own large amounts of power. You have land and the ability to build a variety of types of data centers, and you're able to deploy and operate Tier 3 and Tier 4 data centers for the most sensitive data types, for the most critical customers that need to operate with full sovereignty. And I think what you'll find as you look at MARA by the end of 26, it's a company that spans power, or what we call electrons, all the way to actions, meaning insights. And it'll be very exciting.
Perfect. I think that's an amazing place to stop. Thank you so much, Fred. This was a really interesting chat, and I'm excited to see what MARA does beyond just exahash. So thank you.
Thank you.